Welcome to the weekly mortgage market update for the week of December 7th, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was another week that was not kind to mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage bonds have been selling off since late September. They kind of found a ceiling there, tried to battle above that, could not, and then they've just been selling off as of late. We did try to rally back, as you can see there, with that upward trend, but then huge sell-off this past week. Sold all the way off till Friday. Friday we finally found a floor of support with that green candle, but the trend is still down. But we did find a floor of support. So with that green candle on Friday, we are going to recommend cautiously floating your mortgage rate to start the week. But again, if it was to turn red and sell off, we would quickly switch to a locking stance. If we break below this floor of support, we got a long way to go. Rates are going to move higher. So let's dig into the news that's been moving the market lately. So if you look, the jobs report was the big thing that came out on Friday. That was the November jobs report. Came out at 211,000 jobs created, better than expectations. And they did revise October and September numbers actually higher. So great jobs report there. Then we dig in more of the report. The unemployment rate stayed the same at 5%, which is a 7-year low. So that's good news. The labor force participation rate actually moved up for the first time in a while from 62.4 to 62.5%. That's the number of people that are eligible to work that are actually working. So all in all, very good jobs report. And with this jobs report behind us, most people, 80% of the people out there are predicting the Feds are going to raise their short-term interest rates, which is called the Fed funds rate, at least 0.25% in their next meeting, which is in December. So with that in mind, we probably are looking at higher interest rates in 2016. So now is a great time to buy or refinance. Take advantage of these low rates. Even though rates have moved up over the last couple of weeks, they're still unbelievably low rates. So take advantage of that. Then we saw Thursday was the release of the weekly initial jobs report. That came out at 269,000 claims. That's a good number, very solid number. If you look at the chart there, the numbers have been hovering around there for the last couple of weeks, which is great news. So this jobs report shows consistency in the weekly reports and is showing less firings and a stronger job market. So again, that supports the jobs report. That's another impetus for the Feds to raise the short-term interest rates in their meeting in December. Now in housing news, some very good news there. CoreLogic released their home price index for October 2015. It showed a 6.8% year-over-year appreciation from last October. So the reason for that is there's a low inventory of homes for sale and there's a strong demand from buyers. That's what's been putting an upward pressure on home prices. Now on a month-to-month, we saw from September to October, home price increases 1%. So again, that's a good number, 1% increase from 1 month. CoreLogic's predicting for 2016 home prices to go up 5.2% from this October to October 2016. So great price appreciation predicted again for next year. So another good reason to get out there and purchase a home if you have not already. And then in some industry news, FHA sent out a mortgage letter. It was Mortgage Letter 2015-27. In that, they announced new condo rules to make it easier to finance condos with FHA loans, because sometimes it can be tough. So there's 3 things they changed. The first one is when you do a calculation on seeing if a condo qualifies, you cannot have more than 50% of the properties in the complex investment properties. So in the previous calculations, anything that was not owned as a primary residence was counted in that number. So they removed anything that's a second home out of the calculation. So if it's not a true investment property, it's no longer counted in that calculation. So that'll help more complexes qualify. The second thing they did is they expanded the allowable insurance for the condo associations to open up more condos to be eligible. And then the third thing is they simplified the recertification process for condominiums, because it's been arduous so far. So they made that simpler for condos that have been qualified before to get recertified and be still eligible for FHA financing. Now in the local news, Delaware State Housing Authority and the Maryland Mortgage Program, both of those announced that they raised the minimum credit score to qualify from 640 to now a 660 to use any of those down payment programs. They also will no longer allow manufactured homes to be eligible for those programs, and they will no longer allow lenders to manually underwrite loans. They must be approved eligible through the automated underwriting system. So all that's taken effect. So if you were pre-approved using one of those programs, your score is below a 660, you need to either get your score up or you need to see if there's other programs available. And there are other programs depending on the area. So give us a call at 302-703-0727 or 410-412 6196 if you want to get more information on which programs are available there. So give us a call and we'll see where you're at and if there's any other program if your score is below 660. And then in the local news, the next first-time homebuyer seminar is Saturday, December 12th. That's in Newark, Delaware from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for the event by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.